Hi and welcome to the Market Alert for Friday, the 27th of March 2026. So oil spikes on nukes and no deal. Headline fatigue hammers bonds, big tech, Bitcoin and Bullion. An unwindy price action in multiple pockets. Let's just have a look at this oil price as it spikes. Slightly alarmed by this here where it says on nukes. I am assuming this is a deal that was in the pipeline before Trump preempted and decided to go in and bomb Iran. And of course now he's on his own, isn't he? Nobody else is backing this war. And Iran has over 1 million foot soldiers and the US doesn't. So he's sort of been painted into a corner, hasn't he? And he's now got to decide if he wants to go in or not, or still bomb the power plants. But the oil price, you can see there, is moving back to the upside. We've gone from 98 to 108, so $10 increase in the price of crude there. And in other news, US stocks finished lower amid tech comms weakness and higher oil prices again mentioned, while Trump extends Hormuz deadline by 10 days. There you go. So he's becoming a bit frightened, isn't he? US President Trump announced to pause the period of energy plant destruction by 10 days to Monday the 6th of April 2026. So that's not this coming Monday, so that's a week on Monday. Yeah, 10 days would be that, Keith, if you work it out, at 8 p.m. We'll just have to wait and see, won't we? And at the request of the Iranian government, while he added that talks with Iran are going very well. Yeah, they were going very well with Ukraine and Russia as well. 24 hours, did he say, of being inaugurated, he would actually end that war. Stocks fall on oil gains as fate of US-Iran negotiations remains uncertain. They won't happen, and he won't bomb. It'll be one of these things that's just going to go on and on and on, isn't it? Economic news for today. We just got the retail sales and revised consumer sentiments. Pointless looking at these at the moment because obviously the Iran war situation is dominating the headlines. Right, let's have a look at the markets for yesterday and kick off with the Dow. So in the Dow yesterday, we can see there was some selling in this market. A bit more detail in the 30-minute chart. We're moving lower. This is obviously the 10-day extension to the 6th of April, and then that dropped. The market dropped once that news had been absorbed. Or was it this one that was the news of 10 days? I suspect it's this one. It was later on in the session, and this is just the usual opening of the cash market, which is still 130. Changes back to 230 on Monday. So we're around the DP and close level for yesterday. So this is definitely that announcement for the 10-day extension there. And in the German DAX, we can see the market down yesterday, closing back above the 5-bar moving average. There is volume there, but overnight market slightly weaker. In the 30-minute chart, again, you see the usual move to the downside, then back up with the cash market opening in New York before the selling takes place, and then a quick spike to the upside with regard to, again, that 10-day decision to delay bombing the Iranian power plants. Market above the DP and the close there in the 30-minute chart at the moment. And in the S&P 500, down yesterday with the tech stocks that are in the S&P 500, market up overnight. 30-minute chart again, you got that same spike at when was that an announcement? Let's just have a quick look. 8:30 last night, and then you've got the usual spike up with the opening of the cash markets. The FT 100 was down yesterday, and the 30-minute chart there shows exactly the same thing. The UK not so bothered about this 10-day plan, probably realise it's complete and utter tosh. And the FT 100 still moving up quite nicely there. Let's have a look at the US dollar. And in the US dollar yesterday, once more, we see prices moving back to the upside. We're going to have another go at the 100 level, which we're struggling with at the moment. That's just here. But the 100.54 is where the high is at the moment. Meanwhile, in the metals in the Far East, they're trading at 77.14, and there's still an $8.59 premium between the two, if I'm correct in what I saw. A 65 has changed since I last looked at it, so $8.65 difference in premium there. And the gold silver ratio is barely moving, it's just sideways there, sitting at 64. And the pressure in the silver market and stress currently remains at 84. Inventory depletion estimate 131 trading days if recent withdrawal pace continues. So there's been an increase in withdrawals of physical silver, but there's still 131 days of silver that's eligible to be moved to wherever it needs to be. Right, so let's have a look at the silver prices and gold prices. And in silver, yesterday the market down. Today is Friday. Are we going to see a Smackdown Friday event if the US dollar continues to move higher? Yesterday there's the sell. They moved back up at lunchtime and then sold off. Overnight there was a bit of a pullback there and we bounced off this, but there is some selling around in this market at the moment, so don't be surprised if it attempts to try and move to the downside. In gold, it too is sideways to higher, and in the 30-minute chart you see less of a move for gold moving down currently, which is why you saw the gold silver ratio moving back to the upside. But yesterday we had a sideways move and then we sold off, and then the announcement there at 8:30 last night. But overnight Asian market is seen buying in gold there. So yesterday we see the market putting in two sell signals there after moving lower initially from the start. I forgot to hit the record button. Fortunately, nothing else had happened. We've already got one trade completed, and then we get the acceleration to the downside. We then find support because the market's become sideways. We've got some buying down here. Prices then reverse and move to the upside, and then trade sideways. The good news here is that the volatility has dropped off quite a bit because we're actually getting trades once more into the US afternoon, and we have a buy signal there moving the market up over 100 points, 150 points back up to the S1, and then prices have another go, just a short burst there up to the low where the market stops. We then get the selling coming into the market, stopping the move. You can see that with the red bars down at the bottom. A bit of short covering coming in there with the green bar, and then prices resume back to the downside down to the S2 until you see that volume there again once more. So prices then sideways into the early part of the evening. Let's have a look and see where we are overnight. So overnight the market broke out from this level. You can see that run into trouble with the selling coming in. Markets come back down to this area where we've got the support. You see it sitting on there. It's broken to the downside on there and moving slightly lower, but it's become sideways once more. DP is important, as is the close to hold there. Right, that's it for this one. Don't forget the clocks go forward this weekend. That changes everything back to what we would consider to be normal next week, with the Dow opening at 2:30 in the afternoon. Have a great day and a great weekend, and as ever, thanks for watching. See you in the next one.